New data says tens of millions of Americans are doomspending in the face of economic stress, essentially deciding to live for the moment and pray for a miracle. CNBC reported the study by Intuit, which defines doomspending as spending beyond one's means specifically to alleviate stress. What stress, you ask? The study found fully 96% of Americans are concerned about the current state of the economy. Presumably, the other 4% are riding with Biden. Over half of Americans say conditions have gotten worse in the past 6 months, while 56% are living paycheck to paycheck, meaning they have less than $2,000 in savings. In fact, according to the study, almost 1 in 4 Americans have literally zero savings at all. More concerning, the study found that fully 27% of Americans, roughly 35 million households or 90 million souls, are doomspending, meaning they are falling further and further behind. The main concerns, as you'd expect, are inflation and unaffordable housing, with nearly half of Americans saying they don't have enough money to afford the basics, so food, clothing, rent. The young are particularly concerned, with a quarter of Zoomers being unable to find decent-paying jobs, while over 70% of Zoomers and Millennials report financial anxiety. In fact, the young are reporting the highest rates of doomspending, with 35% of Zoomers and 43% of Millennials reporting spending beyond their means to cope. Meanwhile, the young are also reporting the highest increases in spending. In other words, they're essentially giving up on building something for the future. The study ventures that they're giving up because they're losing hope in the economy. Of those who are optimistic, just 1 in 4 think inflation will level out, while just 1 in 8 think the job market will improve. I mentioned in recent videos how the young are giving up on buying a house or starting a family like their parents did, essentially resigning themselves to a life of instant ramen, roommates, and Netflix binges at 40. Indeed, the Intuit study found a quarter of Zoomers and Millennials are moving back in with their parents, with young adults most likely to move back. In other words, they tried the real world for a few years after college, and now they are giving up. It's worth mentioning that 25 to 29 used to be the prime age for starting a family. Now it is the prime age for giving up and doom buying a cruise to the Bahamas instead. The problem's actually been simmering for years, really since 2000, when our economy tipped over into a Federal Reserve-dominated economy with high spending and slow growth. To illustrate what happened on the ground, Moody's says rent since 1999 rose 135%, while incomes for all age groups rose just 77%, so half as much. The median house, meanwhile, is 274% what it was in 1999, according to the Census Bureau. So incomes didn't even begin to keep up despite soaring numbers of people working multiple jobs, 8.4 million according to the latest numbers. So what's next? Brought to you by Unchained.com. The clown show that is Bidenomics is a mere intensification of 25 years plus, gutting our productive capacity in the economy, with the young being the tip of the spear in economic fallout. In theory, they'll connect the dots and begin voting for smaller government, less regulation, and more entrepreneurship. In practice, though, it could take a lot more pain before they connect those dots. Okay, we'll be watching. See you next time.